let me now address the issue of disinvestment and what the government is likely to do as far as the disinvestment roadmap is concerned. I talked about the markets, and the Indian markets have, of course, faced their own degree of volatility on account of the fluctuation of FII inflows, but that's been offset by very strong domestic institutional interest and domestic institutional investment into the stock markets. There really has been, in a way, a democratization of the Indian capital markets that we've seen. How does your department, how does the government intend to leverage what we see happening in the market? What can we expect? More public sector companies doing OFSs? Are we likely to see more IPOs? What can we now realistically expect?
Good question, and I entirely agree with you on the observation. The first dose of financial inclusion was Jan Dhan, was Aadhaar, was UPI, what is globally called the India Stack. The second big structural change that has come about in our economy is this great democratization of our capital markets. And as you know, the foreign institutional investors keep moving in and out. They have their own sentiments. Last year, they gave us a tough time. And this year as well, in the last few months, there has been great nervousness because of the reasons that you well know. To great comfort and great relief, the domestic institutional investors have become part of our capital markets in a very organic way and in a very democratized way. And if I can just quote you numbers, just say last closing financial year, if the FIIs were maybe slightly negative in the net sense, the domestic institutional investors poured in 6 lakh crores of savings and into the capital markets. So we have moved away from that era where everyone just kept money in fixed deposits and provident funds. And mind you, almost 2/3 of our domestic institutional investments, the mutual funds and the, more high net worth individuals, almost 2/3 of it is just individual investors. And what they poured in as 6 lakh crores is almost twice as the 3-year moving average, which is again twice of the previous 3-year moving average. And this year, they say from January till August, again, as the FIIs in a net withdrew 1 lakh crores, the domestic institutional investors poured in 5 lakh crores. And that is why our capital markets are the best performing world over. We have overcome the headwinds, and you can see they're now stable and looking forward to what today you call reforms reloaded.
So what can we expect as far as your pipeline is concerned, sir, both in terms of IPOs, in terms of public sector enterprises, public sector banks needing to meet the minimum float norms that the regulator has in place? Give us a timeline of what is on the anvil.
You can expect from us honest gratitude to the small investor.
Can you put a number to that, sir? What does that mean exactly?
So essentially what that means is that we started with a few market stake sales at the beginning of the year. We held up a bit in the days of nervousness, but as markets have stabilized, we will bring in value creation opportunities for small investors. We will bring in more OFS, we'll bring in minority stake sales, we'll bring in maybe a few IPOs, and we will speed up this journey. And I will also congratulate and thank CNBC TV 80 because you have helped us connect the policy space, the market space, the investors together in such a beautiful manner.
Well, thank you very much for that, and we look forward to being able to continue to do that, sir. But, so the second half of the year, IPOs, minority stake sales, and OFS, do you intend to make that disinvestment target of 47,000 crore rupees, or perhaps this time, for a change, beat the disinvestment target as well?
fingers crossed, beat it this year.
Beat it this year. You're feeling confident about that?
Absolutely.